Happy Monday, everybody. Welcome to the last Monday market update of the year. Don't stress, your calendar is not wrong. Today is December 18th, 2023, and you still have almost 2 weeks left in the year. Next Monday is Christmas Day, so there'll be no update then. It'll be on Tuesday. So this is your Monday market update. Last week was a doozy and a major sea change in the market as a whole, but I don't want to spoil it all. So let's review the day by day and we'll sum up things in the end. The week started off in the red and markets gapped lower on Monday after a quiet weekend, actually really quiet. As bad as things are in the world, especially geopolitically, it's not gotten significantly worse, at least over that weekend. I'll admit I am frustrated that no one is talking about the 136 or more hostages still held by Hamas in Gaza and the fact that the Red Cross is not doing backflips to see them. But that, Russia, Ukraine, and even the action in the Red Sea, all horrible. But from my seat for the market update, nothing new has happened. An early headwind on stocks gave way, and the sideways action was only broken when the New York Fed inflation expectations were released. They saw, and like we saw last week, they fell. Markets moved higher, but due to an ugly Treasury auction, no real momentum was regained. Yields came down, and markets settled in for a week of many catalysts. The Dow closed up about 0.5%, the S&P up 1/3 of 1%, and the Nasdaq was up less than 1/4 of 1%. For a note on inflation, the recent $700 million Dodgers contract in baseball is the highest in MLB history by a mere $400 million. Is that inflation? We'll just have to see. Stocks extended their gains on Tuesday after the CPI report came out. First thing, it was pretty much in line with estimates, but it may have disappointed a bit, but that lasted only a few minutes. And by the open, stocks were moving up. Most of the moves were just sideways until about lunchtime, and the Treasury auction for 30-year paper. Recall, these have been market moving, and this was to the upside. A good auction and good demand, all prices up, yields down, stocks up. FOMC decision was on the horizon, so the positioning was the name of the afternoon game. By the end of the day, the Dow and S&P were both up about 0.5%. The Nasdaq was up almost 0.75 of 1%. And Wednesday was the big day of the week. Of course, recall that the Fed, the FOMC, their two-day meeting ended on Wednesday, and they issued their statement, and Powell had his press conference. As expected, are two words that we have removed from today's report. While it was as expected that the Fed did not raise rates, that was about where things stopped from the as expected side. The Fed has shifted to a much more dovish statement, dot plot, and even press conference. We can note that the last month or so, we've been hearing the Fed heads saying that rate cuts were not on the horizon. Yet the dots show 3 cuts for 2024, and Powell, first, he did not push back on the rate cut expectation. He actually encouraged it. Reported on purpose or not, that in the room where it happened, they actually discussed cuts. That was all the market needed. They went from a song, higher for longer, and maybe the new one, higher for shorter, or here comes the cuts. I'll summarize in a moment, but for the day, the Dow was up over 37,000, up almost 1.5%. S&P almost up 1.5%, over 4,700. And the Nasdaq was up by about 1.33%, highest closes in a while. More on that in the wrap up on the week. Excuse me. Headlines said it all. I'll add my thoughts at the end. Deutsche Bank reports read Powell breaks out the punch bowl early. UBS says FOMC pencils in 3 rate cuts for 2024. Goldman, a faster return to the 2% target means faster cuts. The Wall Street Journal, Fed starts pivot. And Bloomberg says the Fed prepares shift to rate cuts in 2024 as price pressures fade. Seems like the party hats were on. Thursday started with more of the animal spirits, a lot of eco news, some company news, even global eco news, and no one cared. Low jobless claims, strong retail sales, all overshadowed by the hopes of a soft landing. ECB and BOE central banks were less dovish than expected, so there was some caution there. And the past 12 months of tech moves had some rotation going into the unloved sectors. So it was pretty much the hunters going after the weaker stocks in the herd. The list of outperformers read like the who's who of the year-to-date underperformers. Buyers were falling all over themselves. Treasury yields were down. Overseas markets were up. Oil was up. Stock was up. Upgrades, price target increases. The terms getting thrown around, don't fight the Fed. The Dow finished the day up about 0.5%. The S&P up 1/4 of 1%. The Nasdaq up less than 1/4 of 1%. It did seem that the only thing that could change things was a change in the story, so we'll have to see if that happens. Friday got going, sticking with the story. Fed Head Williams did try to walk back Powell's comments a bit. He said that the Fed really isn't talking about rate cuts now. Markets ignored it pretty much. The animal spirit slowed a bit. Markets opened a bit lower and churned sideways for most of the day. For the day, the Dow was up 0.25%, the S&P down just a hair, and the Nasdaq up about 0.5%. The markets ended this big week. For just this week, 7 straight weeks of gains for the main averages. The Dow was up almost 3%, S&P up 2.5%, and the Nasdaq was also up almost 3%. The Russell 2000, the small cap heavy index, up 5.5% for the week. Not a bad week for the bulls. Before I move into the preview of next week, so I just want to keep a bit of balance. The market is priced for perfection. In case we are about to settle the soft landing debate, by the way, even Powell said it's too early to say mission accomplished. I think he learned that from a famous Texan. Let's hold those words for another time. This is a great piece. There's a great piece in the Wall Street Journal by our friend Nick Timiraos that points out that the term soft landing keeps being thrown around, and he calls it that economic nirvana. And using an airplane analogy, he says it's hard. Unlike an airplane, he says planes land. Economies don't. They're always moving. What's next? Just to note that we are assuming S&P earnings growth at nearly 12%, assuming the Fed will cut rates 3 times. Goldman is even saying more than that, and markets seem to price in 6 or 8 times. Assuming that soft landing, avoiding a recession, expecting the unemployment does not explode higher, that's a lot to go right. Mind you, much of the research and even the LPL 2024 outlook has the S&P climbing in the new year as high as 5,000 in some cases. There is a lot of uncertainty. Let's preview the coming week. We'll see things get a bit thinner on the markets. Last few weeks of trading. Reminder, markets trade full days until Friday the 29th. Year-end moves do keep going. Next week will be light on the eco data. This week will be light on the eco data, and we'll have to see major moves in the data to make a difference in the spirit to the end of the year. We will get one of those numbers, PCE and core PCE, personal spending. Other info will be housing data and even some consumer sentiment. We'll hear from just a few Fed heads, and I submit to you that I think the focus will start to move away from the Fed. We'll keep an eye on those inflation numbers, but the key will be how the economy is holding up, earnings and growth numbers. I would expect the positive tilt to the market to continue through the end of the year, absent something we don't know. Recall that I feel strongly that as soon as you figure the market out, it will change. When everyone is on one side of the boat, it only takes a ripple in the water to turn things ugly. I do think that there are going to continue to be opportunities, and I urge you to keep in touch. Come back on Friday for the planning video, and next Tuesday, post-Christmas, for the last market update of the year. Until then, keep in touch and enjoy the week. This has been a hard week overseas. Please keep the hostages in Gaza in your thoughts. Have a great week.